CNBC-TV18, embarking on a quarter century of excellence.
Hello and welcome to Startup Street. I'm Arundhati Ramnan, and with me, as always, Shruti Mishra. These are the top headlines from the startup world. EdTech major Byju's questions the maintainability of BCCI's plea seeking insolvency proceedings against it. In a hearing at NCLT, Byju's assures that the company is in good health and is only suffering from negative media publicity, demands more time to respond to the plea, citing complex payment issues.
Flipkart preps to raise $1 billion in a fresh funding round, of which Walmart has already committed $600 million. Reports suggest other internal stakeholders and a few external investors will put in the remaining $400 million.
Office Space Solutions files a draft red herring prospectus with the SEBI IPO to consist of a fresh issue of 160 crore rupees and an offer for sale of up to 10.02 million shares by its promoters and existing shareholders, including Peak 15 Partners and Chris Capital.
Cloud kitchen startup KitchenZat raises $65 million from UK-based private equity firm Finest as part of Series C funding round. The funds will be used to expand the hybrid model, Dinarium, which integrates offline and online elements.
Horticulture startup Fasal secures 100 crore rupees in a Series A round led by TDK Ventures and British International Investment. Fasal will use the fresh capital to scale up and expand its B2B brand, Fasal Fresh, and branching out its operations both into India and Southeast Asia.
Those are the headlines we've been tracking for you this evening. Lithium-ion battery recycling company BatX Energy has raised $5 million in its pre-Series A funding round, fueled by Zephyr Peacock in participation with Let's Venture and existing investors, G2 Angel Network and family offices of Mankind Pharma, Excel Industries, Blue Smart and more. Now, the funds raised will turbocharge market expansion and scaling of recycling operations across the country. And to elaborate further, joining me now is BatX Energy's co-founder and CEO, Utkarsh Singh. Utkarsh, welcome to Startup Street. BatX transforms used batteries into battery-grade materials. For a layman, if you could quickly explain how your zero-waste, zero-emission hydroelectric process extracts 99.95% pure lithium, nickel, cobalt from the black mass high yield. What's your USP? How are you different from the traditional practice? And how many batteries have you recycled so far?
Yeah, first of all, thank you so much for having me here. As we all know, like these lithium-ion batteries are all over the place, even in your mobile phone and laptops are powered by lithium-ion batteries. These have these critical materials, that is cobalt, nickel, and lithium. Unfortunately, India doesn't have them as a natural resource. Therefore, it is very, very important, to recycle them, because that is the only way you can have these materials within Indian ecosystem. What makes us different from any other player who's recycling lithium-ion batteries? Because we believe in India, the feed is very, very different, because there are various other more than 300 to 400 different form factors and chemistries of these batteries. So to process them in a single line is a big, big challenge here in India.
Sure.
And that is something we have solved, and it brings down the cost and the economics of it. Therefore, we are able to provide a very, very cost efficient and economic solution. And that too, at the end of it, we are producing lithium battery grade materials. And so far, we have recycled in last 12 months of our operations. We have recycled close to 20 million lithium-ion batteries from India.
All right, Utkarsh, with this fundraise, you plan to create a full-stack recycling and refurbishing solution for OEMs and for your customers. If you could elaborate on how you plan to scale up your material extraction, refining capacities, your commercial R&D for PCAM development from recycled battery minerals, and much more. What are the targets, and by when do you hope to achieve them?
Right, perfect. So at the end of the day, any OEM we meet and we tell them our one and only aim is to maximize the value of these end-of-life batteries, whether it can be from the recycling where you extract the material,
sure,
or it can be from refurbishment. At the end of it, the OEMs, what they look at is how they can provide a buyback value to their customers. And that is somewhere also we focus, so that their customers never leave them. And that is why these OEMs love us. If you talk to me about, what are our goals? So we have one target, the level one target that we have is to recycle 1 billion batteries, because in terms of the entire market size, I think India is the third or the fourth largest market in the world of lithium-ion battery scrap. Therefore, it's a huge potential for us.
All right. And, like I mentioned earlier, Utkarsh, this funding infusion will also be instrumental in expecting BatX's market expansion globally. Elaborate on these plans. What markets are you eyeing and how many new micro facilities are you looking to set up?
Yeah. So as a company, as a business roadmap, we are going to work on hub and spoke model. And the problem that is there for India of not having these materials as a natural resource is same for many other countries all across the globe. So therefore, the technology that we have made here can be scaled up for all the countries like India. So therefore, we are eyeing on the South Asian market at the moment.
Okay.
And as well as we think Africa is going to be the next big thing. That is also where we have partners and we have already started, signing the MOUs. And I think in next year, in second or third quarter, our facilities will be up there.
Okay.
In terms of India, we are going to set it up in the South and East Indian region in next year.
All right. One final question. If you could quickly answer that, if you could take us to the current business growth numbers, the future revenue targets, and what is the road to profitability looking like?
Sure. So I would like to start with, we are already profitable. Last year was the first year of operations. We did 3 million revenue and we are already profitable in that. And next year, we are looking at somewhere around $10 million by the end of this financial year. And by 27, we are eyeing at $100 million revenue.
All right. All right, Utkarsh, wish you the very best and for you to meet your target of 1 billion batteries, recycling them pretty soon. Many thanks once again for joining us on Startup Street.
Thank you so much. Have a great evening.
From one fundraise to another, Bengaluru-based customer experience company Kapture CX has raised $4 million in a Series A1 round from PE fund India Alternatives. Prior to this, the company raised another $4 million in funding earlier this year. The injected funds will propel Kapture CX's global presence, enabling market expansion. Joining us now to discuss this further, Sheshagiri Kamath, the co-founder of Kapture. Sheshagiri, thank you so much for joining us on Startup Street. Now, Kapture is essentially a vertical-focused enterprise SaaS company that uses Gen AI to solve real-world practical problems, but at scale. So talk to us about what's on offer and how are you using AI to make processes for your clients more efficient?
Thank you so much for having me over. So we operate in the customer experience domain. We believe that in spite of all the technology that's been deployed at scale, capital, everything else, customer support is still not a very happy place today, right?
Right.
Most people still dread talking to a support agent. We do realize that the biggest way to solve for this is by taking a vertical approach. So we picked 4 verticals. We have retail, e-commerce, we have travel, BFSI, consumer durables, and then we went very deep into it to ask, okay, what does it take to solve problems in a better way at scale? Then we realized that, our focus needs to be purely on large enterprise. So using that approach, we've managed to acquire over 1,000 customers today in 18 countries.
Absolutely. Yeah, you can continue.
Yeah, and Gen AI, has been a very interesting part of the whole proposition because we do today now see that with greater level of automation, you can also improve your customer support, customer experience metrics, and at the same time bring in a huge cost reduction for all customers, which is obviously the biggest thing that everybody is looking for right now.
Absolutely. That is one of the biggest things. And Gen AI at this point is like the big buzzword. Now, you saw exponential growth post-COVID and you started operations across various countries, about 5 countries right now. So talk to us about which are the countries you're present in, any new ones that you're looking to expand into, what's your top performing market?
Absolutely. So we still continue to be India heavy. Just about 60%, a little over that comes from India. About 15 to 20% of our revenue today comes from the US market. That market's growing pretty well. Indonesia and the Middle East also are markets where we have set up local offices because we focus on large enterprises. So we do end up, having feet on street and invest in local, presence there. So Philippines, Indonesia, Middle East, both UAE and Saudi Arabia have been growing very fast, especially over the last quarter. We're just about to make our first hire in Vietnam. So super excited about international. And I think by end of 2024, we do see 50% of our revenue coming from outside of India. We are on track for that.
All right, so 50% of your revenue coming from outside of India, but you're going to remain India heavy. Apart from global expansion, where else will the $4 million go? What are the other key focus areas? Also, any new offerings, if you could quickly tell us?
Yeah, so some of the reasons that we've been looking. So, firstly, we've been a very capital efficient business from beginning. We were bootstrapped for most part of our life, and when we met the folks at Cactus Ventures earlier this year, and we really got along well, and that's when we raised money. Same thing with India Alternatives. When we met Shivani and team, we did see value in a long-term partnership, not just in terms of capital, but the value that they are bringing to us. So a lot of this capital is going to be in terms of obviously upskilling, the team in a lot of different ways on the launching certain new products and Gen AI, for example. There's a lot of investments that we've made on the machine learning side. We deploy vertical LLMs, which are specific to each of the verticals. So that also is a big commitment from our side. Now, when it comes to the overall, when we are looking at the new products, we've just recently launched a product called Kapture Insights, which basically helps you to manage the entire NPS CSAT in a enterprise environment where you are able to understand what's really wrong and how do you fix it, or what's really working really well. So that's a product we are super excited about. And because of our singular focus only on customer experience, everything that we do now or in future tends to revolve around customer experience. And in that domain, we ask what can we do to make support better, and how can we make the agent or anybody else in that domain more effective.
Right. We're completely running out of time. In 10 seconds, if you can tell us, what are the revenue targets for this year? How much do you hope to achieve? And are you profitable?
So we were profitable until we raised our, Series A earlier this year. So at the current moment, we are, burning capital, but it's still very capital efficient, and we do intend to get back to, profitability sometime in the next 2 quarters. We are on track to, grow 75% year on year, and, on track to touch 100 million revenue by 2026, sometime in the middle of that year.
Right. All right. Looking at 75% growth and hoping to be profitable again in the next 2 quarters. All right, Sheshagiri, thank you so much for joining us on the show today, and we wish you all the best.
Thank you so much.
On that note, it is time for us to head into a short break. But coming up, there is a 40% rise in digital loan disbursement volumes. This, according to a report conducted by FACE. We discuss that and more on the other side. Stay tuned.
CNBC-TV18, embarking on a quarter-century of excellence.
Well, the Fintech Association for Consumer Empowerment, or FACE members, Well, the Fintech Association for Consumer Empowerment, or FACE members companies reported a near 40% rise in digital loan disbursement volumes and a 43% rise in value of loans in the second quarter of this fiscal compared to the same period last year. Now, this data was collected from more than 37 fintechs who
CNBC-TV18, embarking on a quarter century of excellence.
Well, the Fintech Association for Consumer Empowerment, or FACE members companies, reported a near 40% rise in digital loan disbursement volumes and a 43% rise in value of loans in the second quarter of this fiscal compared to the same period last year. Now, this data was collected from more than 37 fintechs who collectively account for about 80% of digital loans by volume. Interesting data that's coming after the Reserve Bank of India cautioned on the unsecured retail segment growing too fast and raised risk weights for lending to this segment. Joining me now to discuss the findings of this report and more is Sugandh Saxena, the CEO of FACE. Sugandh, thanks very much for your time here on CNBC TV18. If I could start by asking you, what have been the key highlights of the second quarter? 39% volume growth, 43% value growth. Which segments are seeing the fastest traction?
So overall growth has been very, very broad-based, and we are seeing growth, as you must have seen, in companies which are doing small ticket loans, but as well as companies which are doing larger personal loans and consumer loans. So regardless of the scale, regardless of the ticket sizes, regardless of customer segment that people operate, I think we are seeing a growth. Of course, it's uneven. Some companies, as you would have seen, the larger ones, the growth is looking much more promising compared to some of the companies where the scale is less. But growth prospects generally look extremely promising, and the driver of the growth remains really the very strong customer demand. When I say customer demand, it's not just about absolute demand that there is an underserved and unserved market, but also huge customer trust and preference for digital lending. I think that is given, and consistent growth in last 3-4 years is really an affirmation of the strong business model of digital lending and customer really navigating towards that. So this is how I would think of the numbers which are coming to us on a regular basis.
While growth is going to vary across companies, there are outliers in this particular data set as well. Are there fintechs which are seeing an outsized growth, for instance, or how should we read this data?
So, fintech lending is extremely diverse. There are players who are into less than 5,000 category of ticket sizes which are doing, and there are players which are going in upwards of 5 lakh plus or even 10 lakhs, when they go to MSME lending. So when we say we exclude outlier, we want to give a more normative picture of most of the players which they operate, which essentially means in the ticket sizes of 10,000 to 1 lakh. This is where the majority volume of the lending happens. So this is what we meant by excluding outliers. Sure. Outliers, they are not outlier as in outlier, but they're outlier in a sense of where the majority lies.
Well, the growth has been strong in the second quarter, but RBI recently has been concerned about the unsecured retail segment growing too fast. And in the data set that you've looked at, are you seeing any concerns or trends of rising delinquencies?
So, in this particular report, we have not looked at, portfolio quality data. But when we look at data from the credit bureaus, which we take for, a smaller set of fintech NBFCs, and we qualify these are fintech NBFCs, so there might be, a risk with different risk available for overall industry as a whole. But when we look at the fintech NBFCs, we do not see, decline in the delinquency or the portfolio quality deterioration. In fact, we see an improvement in the portfolio quality. So, but again, we are only speaking on behalf of fintech NBFCs and not the larger unsecured universe which is up there.
So for the fintech NBFCs in this ecosystem with this higher risk weights for unsecured retail loans, they have partnerships with banks and NBFCs as well. How does it impact the entire ecosystem?
So, headline numbers will tell you that it's more about, the growth moderation. But I think there's more to it, which is extremely positive, where we see that it will allow the industry to shape in a mature way, including improving the portfolio quality, diversification of product and customer segment, and also diversification of funding resources, because there has been a over-reliance on a small segment of banks and NBFC. This is what the policy intention is, and we hope that it plays out in the same fashion.
Okay, so, with this diversification that you spoke of, do you expect the growth momentum in digital loans to slow down in the coming months because of this RBI measure on consumer loans?
For this year has gone, this quarter has gone. So I guess this quarter would remain extremely robust, also because it was a festive season. Perhaps in next 3 to 6 months, the numbers would tell the story. And I don't think it would be a, sort of similar effect on all the players. You will see different players, experiencing different impact on it. Some of the large companies which are well capitalized and have a very robust governance and risk management framework will continue to thrive in this environment also.
All right, Sugandh, that's all the time we have here on Startup Street. Thanks very much for joining in. Pleasure speaking with you.
All right, moving on. 2023 was the year of rising stars and foraying into new frontiers for India's D2C startups. While Mamaearth went public, several others in the space announced acquisitions to further their narrative with untapped categories. Aishwarya Anand brings the year-ender report with the spotlight on funding, top deals, challenges and outlook for 2024. Listen in.
On the 7th of November, Mamaearth made history. It became India's first direct-to-consumer startup to go public. The beauty and personal care brand made the journey from inception to IPO in just 7 years, offering stellar returns to investors and inspiration to insurgent brands. Mamaearth's IPO is being considered a major chapter in India's D2C odyssey. The revolution began around 2010 with challenger brands who defied the hegemony of FMCG giants. They caught the fancy of millennial consumers at a time when e-commerce in India was just taking off. Amazon had entered India, and in fact, it was in this period exactly a decade ago, in 2013, that India saw its first mega annual festive season sales. And then came the disruptors who rode the Jio wave and tapped India's new-to-internet consumers. To put this in perspective, the number of online shoppers surged from about 15 million in 2015 to 90 million in 2019. The disruptors capitalized on the digital revolution of offering the oomph factor, even attracting celebrity investments. Then came the pandemic, breaking open new frontiers driven by the more conscious consumer. Innovators stepped in with science-backed products and patented tech. Following the pandemic-led digital push, we've also seen the rise of small-town India, and now 7 out of 10 online shoppers reside in Tier 2 cities and beyond. In a relatively short span, India has witnessed the rapid ascent of more than 800 D2C brands, amassing a combined revenue of approximately $12 billion, and this figure is projected to reach to a staggering $60 billion by FY27. As the market is expanding, D2C startups are venturing into uncharted territories. 2023 saw startups step into untapped categories, from tackling sleep and shoes to targeting men and Gen Z. The top D2C deals this year are a clear indication. While online jewelry brand Jiva bagged the top spot, men-focused brands such as the Indian garage company XYXX and Snitch have cumulatively raised nearly $45 million. It's not just the startups that are tapping emerging categories. Large conglomerates are also rushing to catch the train. This year, both Flipkart and Myntra have launched their own Gen Z-focused shopping portals, and actor Alia Bhatt's mom and baby wear startup caught the eye of Reliance Retail, which picked up majority stake in the venture. Moving on, the Tata Group-owned Titan spent 4,600 crore rupees to acquire total control of omni-channel jewelry retailer Carrot Lane. And FMCG giant Unilever, through its venture arm, bagged 2 startups in nutrition and skincare categories. Meanwhile, Aditya Birla Group, through its House of Brands Tomorrow, invested in the Indian garage company this year. And in one of the most landmark acquisitions of a D2C startup by a large FMCG enterprise, ITC signed a deal to take over the parent company of Yoga Bar. While these acquisitions validate the efforts of startups and provide much required exits to investors, it also brings in focus a key challenge for some of the mature D2C startups, and that is revenue growth. In the post-pandemic era, with many competing brands Fighting for the same consumer, online omni-channel play has become a business necessity. However, scaling up requires capital, and that has been in short supply this year. In 2023, investments in D2C startups slumped by nearly 40% to about $860 million. Fewer deals were closed, just half of what we saw last year. When we take a look at the stage-wise split, it's clear that the mature growth to late-stage startups have felt the chills, with investors asking for clawback in cash burn and proof of profitability. It's the early stage and emerging brands that have kept the checks coming for D2C in 2023. As we turn the page to 2024, India's D2C ecosystem is moving towards the new year with some favorable tailwinds, one of them being ONDC emerging as a key lever of growth and discoverability. Both the Good Lamb Group, Vaskin Science and Mensa, among others, have joined the Open Network for Digital Commerce, and brands from India going global is set to be the next big thing. Indian D2C brands are eyeing Middle East and Southeast Asia for global foray, and then there of course is the Bharat market, which could not only drive consumption but also entrepreneurship, birthing brands to fuel the next leg of India's D2C revolution.
Thank you so much for all those details, Aishwarya. With that, it is a wrap on this edition of Startup Street. But here's Shruti and I wishing all of you a very Merry Christmas. We've already started the cheer with our colors here. But with that, it is a wrap. More news and updates continue on the other side.
CNBC-TV18, embarking on a quarter century of excellence.